Does paper suppress the silver price? And here I can show you very graphically and very simply, absolutely yes. Well, hello there, my friends. Rafi here from the Endgame Investor, coming at you with this week's silver report for Arcadia Economics. And we have some more fun data and fun news for you this week. Let's go right into it, shall we? The first thing I want to go over this week is to definitively answer the question, does paper suppress the silver price? And here I can show you very graphically and very simply, absolutely yes. We see here, this is the silver price going back to 1970. This is open interest in the green here. And open interest is the number of paper contracts that are open, that are issued, traded back and forth on the COMEX. And we see here from 1975 to around just before 1980, we had an extremely elevated open interest number of contracts traded on the COMEX in silver during those 1970 years. So we see here that the price of silver in the mid-70s was basically stable from around, what is this, around 1974 to around 1978 or so. And then it started getting out of control. During this time, the open interest in silver went to all-time records that have not even come close to being broken. What is it now? 40 years later. But we see here in 1980, during the final spike from 1979 to 1980, what was happening to open interest? It was collapsing. This was a massive short squeeze for everyone who was short a silver contract, and open interest kept falling and falling and falling as the price went parabolic. As this paper scheme was coming to an end, that is precisely when silver went to the moon. And we can see this even more clearly in the next chart. Here you have the silver price overlaid with the open interest. Why was open interest in the green background here? Why was it so high in the 1970s? Because they were trying to keep silver down to save the dollar. The dollar was under attack by the world, which saw the currency as extremely weak, having just gone off the gold standard, and the entire monetary system was about to buckle. So there were huge amounts of open interest, and here, when it finally started to fall, that is precisely when the silver price went to $50 in 1980. Very clear, yes, the COMEX silver futures suppress the silver price, and that is coming to an end soon. Another thing that happened this week in silver on the technical charts is that we hit the uptrend line, the bull uptrend line since the 2015 silver market bottom, in commodities terms at least. See here that silver in commodities terms was at a low here in 2014. This was the oil collapse of late 2014, and we hit that trend line again in October of 2018, and we finally hit it again just this week at 0.095. So silver in terms of commodities has hit its trend line, and it should be rising from here in commodities terms. Now, the next thing I want to go into is there's a lot of talk about inflation this week as the CPI came out at 7%. Now, obviously, this is not inflation. This is rising consumer prices, which is a result of inflation or a consequence of inflation. But instead of going into the actual CPI and saying, oh, 7%, we can have a much clearer idea of what the inflation rate of consumer prices really is by looking at something that is released by the Federal Reserve Bank of Atlanta. Right? They take the CPI and they divide it between flexible and sticky. Now, what does that mean? What is flexible and sticky? Well, flexible means the frequency of price changes are frequent, and sticky means they are less frequent. So if we divide this up, and the surprise will come in the next slide, you'll see. The flexible CPI inflation rate consumer price inflation rate is now at just below 18%, and this is higher than it was in the 1980s and the 1970s. This is a new peak for flexible CPI. The sticky CPI with less frequent price changes is at 3.7%, which is the highest since 1990, but still not anywhere near as high as 1980. Why not? That's the question. Why is sticky price not as high as it was in 1980? Is this a real thing, or is it cosmetic and artificial? You'll see on the next chart that it is entirely artificial and that we are at higher inflation rates across the board now than we were in 1980. Here is the sticky versus flexible. What is the difference? This is what constitutes sticky price inflation. If you look here, you see these 4 boxes. It says OER Northeast, OER Midwest, OER South, OER West. What the hell is that, right? If you add all these up, these numbers, 5.3, 4.5, 7.7, 6.9 of relative importance, right? They all add up to 100. This of the sticky price adds up to 24.4 of a total 70.1, which is about 33%, a little bit over 33% of the sticky, of the sticky price index. So OER is called owner's equivalent rent. It's short for owner's equivalent rent, and this is a fictional price that does not exist when the Fed calls up people who own houses but do not rent them. What do you think you could rent your house for theoretically? And this is how they keep rent prices in their indexes suppressed. So the difference between sticky and flexible is a fake price called OER. And guess what they did not have back in 1980 when sticky prices were just about as high as flexible inflation, right? They did not have OER. It was not a thing back in the 1970s, 1980s. They actually counted rent. So if we take out OER and actually substitute actual rent prices that are rising at double-digit rates now, we would definitely be at rates above the 1980 highs, both in sticky and flexible. So we're headed into new territory here, and it's not much longer until the metals do explode. I know it's been a long time, and I know it's very frustrating, but it will not last forever. I can guarantee you that. What I wanted to end this video on is to talk about the collapse of certain narratives. And I won't be specific here, but you'll know what I'm saying. There are certain medical narratives that are collapsing now, and there are certain political narratives that are collapsing. This is all reflected in finance, and we're seeing it in the exploding inflation statistics, consumer price inflation statistics, which haven't even begun to be computed for 2022, when specifically consumer-facing companies are raising their prices to capture and to keep passing on price increases to consumers. That we're going to see in the next CPI statistics for January, which come out in February. We're going to see a big jump in the CPI, and we're going to start seeing serious doubt as to whether the Fed can keep the system going. We're already seeing that doubt come from former Fed officials and people like Mohamed El-Erian, which are openly questioning the Fed's credibility. And Bill Dudley, the former head of the New York Fed and former vice chair of the Federal Reserve, called the Fed's forecasting Alice in Wonderland in terms of where they think price inflation is going to be by the end of the year, which is about 2.1%, and he called that Alice in Wonderland fantasy. That is true. The Fed is losing credibility, and once the Fed loses credibility, the dollar loses credibility, and once the dollar loses credibility, silver goes vertical. It's close. It's coming. Exactly when, we cannot know, but we know that it will, and we need to stay stable mentally and, of course, physically, and I want everyone to have a good weekend. This is Rafi, the Endgame Investor, coming at you with this week's silver report for Arcadia Economics, and I'll see you next week.
Well, thank you, Rafi. That is another incredible silver report. And before we wrap up today, a quick note for all the folks who did win silver at Silverfest 2 and might be wondering when's that coming or what's the delay been. Well, it took a while to round up all the information, but good news, because the Silverfest 2 dice ounce is being minted, as you can see there. That's what one side of it will look like. Yara is painting away the Arcadia Silver logo. Good things happening in the world. Good things happening to people who love silver. That's coming your way. Hit the subscribe button and the notification bell right now. Do it. You can be at Silverfest 3 and be like all the people who won multiple ounces of silver. There's a lot, 10 packs, 20 packs. People are just going to have plenty of silver dice because they've supported freedom and love and all that good stuff. So that's why you hit the subscribe button. That's why you hit the notification bell. And tomorrow, I will show you what Jim Rogers and Warren Buffett think about silver. Not just some pike or treasury investors. I mean, these are the legends. Come tomorrow. See you then.